Let's get some common sense now. Stocks and bonds are common ways to invest, but there are other alternatives. Joining us now to talk about preferred securities is Craig Bolanos, the CEO and founder of WMG. Craig, what can you tell us?
Well, you know what? Preferred securities, they're off to a great start in 2023, and they can be a higher yielding alternative to traditional fixed income options, aka bonds. In general, preferreds, they offer generous yields, both absolute and after tax. And with their high income stream, that really can serve as a total return buffer against what we would deem volatility. As such, we look at these higher yielding securities as really complements to what would be traditional fixed income inside of a core portfolio.
Craig, this is certainly intriguing. Give us more details.
More details? Angela, how about 5 details? So first, hybrid securities. And preferred securities are hybrids. They can be classified either as equity or they can be classified as debt within a company's capital structure. Preferred securities are senior to common stock, but junior to what you and I would call traditional debt. And as such, they don't have the same capital appreciation of common stock, nor do they possess the same capital preservation that you would see with a bond. That's why we call them hybrid. But there's also a financial focus. That's number 2. The majority of issuance of preferreds comes from financial institutions. Thus, preferred securities are highly correlated to the health of what I would consider the financial system, banks and insurance companies. Part 3 is credit risk. Sure, preferreds tend to not be AAA or AA paper. Typically, they're BBB and below. And that just means they have a higher amount of credit risk, but people are compensated for that higher amount of credit risk because of the generous yields. And again, typically, these are being issued by many financial institutions, and those have a tendency to be higher quality businesses. Next on my list, and this is really important, there's multiple markets. The preferred market actually has 2. The retail market, what we call $25 preferreds, and those have a little bit of what we would call longer duration, lower yields, and they trade on an exchange. But then there's the institutional market, what we call $1,000 preferreds. They might have some better quality components, but they don't trade on an exchange, they trade over the counter. And then finally, rounding out my list, it's diversification benefits. Given the hybrid nature of preferred securities, there's a diversification benefit that can be had by adding these as a sleeve to a core fixed income portfolios, again, because of the generous yields, both absolute and after tax, that people can get. So I wrap it up and say, what's the bottom line? I really do think investors can and should continue to seek methods to help cash flow their retirement. And to the extent that cash flow might be a goal of someone's portfolios, I think preferred securities, these unique hybrid securities, absolutely deserve a look. But investors should make sure they work with qualified professionals who have a deep bench of talent and access, not just to retail preferreds, but what I consider the preferred method, which is the institutional marketplace that's over the counter. If you want to learn more, you can, and I also think investors should. I'm Craig Bolanos, the CEO and founder of Wealth Management Group. Check out our website, investwithwmg.com.
Go to businessfirstam.com for where to see our show on TV.